Let's bring in Alli McCartney, Managing Director at UBS Private Wealth Management. Alli, have you been telling clients to buy this dip?
Yeah, yesterday was a great day for us, actually. I mean, when you think about it, you have a market that over the last 2 weeks is up about 5% for the S&P. You had, a 1-ish% decline yesterday, continue to flirt with the 4,800 level. The market is trying to figure out what the new narrative is, and the new narrative is going to be dominated largely by the Fed, not by COVID anymore, I don't think. Omicron and sort of the sensitivity to subsequent waves has been less and less, both from an emotional reactionary perspective and from an economic perspective. And so the question is, what is going to take us to the next level? And we think that we are in an environment where, yes, we are going into an increasing interest rate environment. To Stephanie's point, we all knew that was happening. Maybe the pace has changed slightly, but yesterday, in our perspective, was an overreaction to that pace. And so what these dips allow us to do, especially while institutions are puking up technology and everything else with it, is to take advantage of what may be finally the beginning of that rotation to cyclical and value and cement some very specific U.S., Europe, Japan, mid-cap, and cyclical names.
Give us some of those specifics then.
Look, so we talked a little, there are certain parts of the themes that I think are going to resonate, and you're going to continue to see cyclical growth again, and we've all talked about this, nothing new. Financials, industrials, energy. I think there's some other spaces of the market that people aren't talking about a lot. There are pockets of technology, cybersecurity. I noticed you're addressing this hour. That is a big one. That's a huge secular theme for us. Big data is another one. The other thing is sort of taking apart companies and saying which have a fundamental story, which are price deciders, not takers, which are beneficiaries of the massive amount of cash that's around in terms of very high earners have a lot of cash on their balance sheet, and that is going to get into the market both by buying equities and by spending, whereas people that have less money and existed in the last number of years on checks and social programs are going to be in more trouble. So we really want to focus on individual stock selection. We want to get out of largely the mega cap space. We want to stay a little defensive. We had some talk about biotech. I think healthcare has really been the baby thrown out with the bathwater. There are a lot of defensive themes in there, a lot of dividend payers as well. So there are a number of themes, I think, supported by that.